for the guys who can't actually make it. Okay. Now, all right, I almost forgot to mute everyone. Let me just do that now. Okay, hopefully I'm the only person you can hear right now. All right, guys, as the rules go for the session, okay, what you need to do is make sure that you have your audio on, right? Right. If you have, let's say, if you're using your smartphone, right? For example, if you're using smartphone, I think you just click on join or dial in. I'm not quite sure. I think it's dial in or join audio or something along those lines, and I'll be able to hear you, although you'll be on mute for now. But if you have a question, then you just basically raise your hand and I'll mute you, and then you'll be able to speak. Obviously, the main reason is that there's a lot of different background noises coming in from everyone in attendance, so it does make the audio recording or the audio side of the recording very terrible, and therefore we just choose to mute everyone and just unmute them whenever they have a question. So just make sure you're aware of that, or you can just type in your question in the chat section. I think it's on the right hand side, probably on those three dots or something. It's just that I'm not that familiar on the other side of the app, the mobile app side. Okay. So aside from that, guys, let's start today's session. Mainly what we're going to be looking at, right, guys, you remember we spoke a bit about, we've spoken extensively about breakout and how to leverage off a breakout trade. And we've taken into account a lot of the different things or factors that would quantify a confirmed breakout, because there are a lot of breakouts within the market, okay? But a lot of them are false breakouts, right? As the market will trend about 30% of the time on average, right? And will only move sideways or consolidate or just have no clear direction 70% of the time, which is actually quite a huge number. And therefore, you're going to have these up movements and then the market will soon down again, right? So you're going to have that continuous up and down movement that does entice and induce a lot of traders, right, professional as well as retail, to get into the mode of trading, right? So you might see a lot of false breakouts coming in at some near strong, quote unquote, previous strong support level or resistance level. Okay, so with that being said, what you want to do is to have some confluences, right? So we've spoken about confluences, and the main one we've actually been using is the patterns itself, right? The candlestick patterns. What should happen at a previous market structure, right, in order for us to quantify or to say, all right, this is a breakout, and this particular breakout. All right. Okay. I'm not sure, but I think, if you're able to type, someone says they're still trying to figure out Zoom. But if you're able to type, you've probably got like 99% of what you need, right? Because everything you can just text to me, and if I feel like the question is relevant to that particular section, I'll just answer it there. I'll hold the question towards the end. So if you're able to chat with me and then you can see and hear me, then perfect. Right, you got everything you need. All right, so taking just a brief example of this USD CAD, right? So this USD CAD, we had this break below this 31.19 level, right? Market low for last week, right? So market low for last week was 31.19. Market broke below it, came back into that zone again, right? Aggressively so, and market shifted away. Okay, so that would be somewhat of a confirmed breakout, right? Because the market is predominantly down. You can see by the moving average, you don't need to do a lot of analysis. You just need to look at where the moving average is in relation to the actual price, right? You can see the price is moving firmly below the moving average, which is hovering somewhere above the highs, and therefore that signifies to us that we do have a bearish trend. Right now, the bearish trend could be short term, could be mid term, it could be a long term trend. Now, that's all going to depend on which time frame we're actually looking at. Okay. Now, when we're switching between time frames, it's very important to try and stick to at least two or three current or two or three time frames that aren't going to really confuse you in terms of how which trend is more potent. Okay, because a lot of guys use the 1 hour time frame and then they switch back to the weekly and then to the monthly, and then they find that all of these time frames basically conflict or contradict each other, and therefore, right, end up not placing a trade or not getting into a position because they have this sort of okay. All right. I'm not quite sure. I think Cyprian raised his hand, so I'll assume that you can hear me. So therefore, you just need to unmute yourself, or just click on the join audio button somewhere there on your Zoom cloud meeting app. I'm not quite sure where it is on, but I see everyone else has already done so, right? But you just need to click on that. I'll unmute you, and then you can ask a question, or you can just type it in the chat, and then I'll answer it from there. Okay. Now, as I was saying, all of these different time frames that we end up using can become conflicting, right? Because if we look at the H1 is showing us downtrend, and then we're going through to our weekly showing us an uptrend, right? And if I go to our monthly time frame, okay, monthly time frame, right, also somewhat of a upward trending market, okay? So all these different different biases you might form from using all these different time frames can be incredibly confusing. So, which is why I say usually just stick to those three, right? Namely, you can do your daily, your 4 hour, as well as your 1 hour time frame. Okay, just to keep things simple, because it's not like because we fall into this trap of believing that the more analysis or the longer it takes us to analyze a market, the higher the probability of the trade actually working out. But in most cases, that's not really true. All right. You can spend hours and hours and hours or days analyzing the market, and you can get stopped out within 10 seconds or even 1 second. Or you can go into a trade. Right? Some of my best trades were very effortless. Like 2 minutes in, and I see an opportunity, and I'm in, and the market pays out. They're very simple, very straightforward, and very effortless. They're the ones that you usually have to force, or you have to analyze, you have to think a lot, you have to wreck your brain. Those trades usually don't go the way that they would. Okay, so like I said, keep things simple. Right? Keep your daily 4 hour, 1 hour chart. If you get tempted to use all these other time frames, there's a way in which you can remove all these other time frames from your chart so they don't distract you and then you don't get confused and have what's called analysis paralysis, where you're just stuck not being able to make a trading decision simply because there's too much information going in and you can't simply process all of that. And therefore therefore you just want to make your trading as simple as possible. So let's just go with the scenario where we're just using daily 4 hours as well as H1. Right now we can see from current price action that the market has been in somewhat of a consolidation, right? You can see the range from September, right? September highs, September lows. The market predominantly for the month has been trading within that range, right? We can see only 2 days ago, the market broke below that low, right? At 31.30 level and came back to retest. Although it was a very slight retest, right? You had to drop down to the lower time frames, okay? Lower time frames. Let's just use 4 hour, right? So the 4 hour time frame, because it's just right? So there's September. Okay, let me just change September. Okay, let's have it as a yellow. Okay, let's remove this Fibonacci for now. Okay. So low September, you saw it was very slight. You can see the retest was actually very slight. You had to drop down to your lower time frame. But on the daily time frame, if you're familiar or you've been using the daily time frame for any period of time, you'll realize how much of a significance that this breakout actually played, because it's the previous month's low, right? As you guys know, previous month's low, previous month's high, previous week's low, previous week's high. Those are the areas that we look for liquidity, because that's where all the pending orders are going to be on the downside, and where the pending orders are going to be on the upside, where the buy stops are going to be. So what we do is we'll wait for some sort of confirmation to come in, right? And with this one, right? This one, it's typical and it's similar to the trade scenarios we've had in the GBP USD and Euro USD in the past couple of weeks, where we've had the market make a significant low, right? Might not be that visible, but this is last week's low. Okay, and the market pulls away, right? Pushes down, breaks this low, right? So breaks Friday's low, which also happens to be last week's low, and the market comes back into that area, right? Because there's still liquidity around 31.19, right? There's still people who were shorting previously at this zone, right? So they were traders shorting at this zone. Let me just. All right. So there was some shorting at this zone, at this area again, and when the market, this does look like sort of like a fair price where traders have traded before, which means most likely if the market comes back up to that zone again, there are willing sellers at that point again. Okay, which explains why we'd like to wait for the pullback to come in before we confirm that short side sell-off. Okay, now that would be the ideal situation. Now, before a lot of guys get excited about this USD CAD, because a lot of times we talk about a setup, right? So a potential setup, and then immediately guys start, getting into positions, like selling or buying, or forgetting that we're just on Mondays that we're just looking at markets and looking at potential setups. Okay. So immediately when we say, all right, we're looking for the USD CAD to drop over the next 3 or 4 months, guys will start shorting. And, they'll do so aggressively because of the excitement, which, is not particularly a good formula unless you know where the entry is, where the exit is, right? Because we can both be in the same trade, right? We can both be in the same trade. One person both of us being short, right? Both of us being short the same currency, both of us being short the same amount of contracts, but we have different outcomes, right? All because of the different management of the trade itself, and of course the risk control, because we can have the same lot size. We can be trading 2 lots each, right? But you have a $100 account and I have a $300 account, or I have a $30,000 or $50,000 account. So those things actually do play a lot into how you structure your trades, how you manage your positions, right? So therefore, you just want to make the most of how much you have in your trading account, right? So if we look at this, right, so this is previous month's low. Market seems like it has broken the low again, broke down below that 31 even level, right? And the reason why I'm saying this one is not that convincing is because the amount of pips. Right now, when we get into a position, let's say we're looking to short at where the current market price is. So at 30.85, I was looking to sell the USD CAD because I believe that the market is going to go down. So first thing I need to do is select. establish where my get out points are. Right? Get out points, I'd be getting out either when the stop loss is triggered, or I'd be getting out when the take profit is triggered. Right? So in this scenario, we can see that we have a major support structure, right? A major daily support structure inside. Right? You can see it's right there, which changes the game, right? Because if there was no swing low here, the market just came from this point. Right? So the market was just sideways consolidating there. This would have been a much easier trade setup because what we do is we throw in the extension tool, right? So we throw in the extension tool on the Fibonacci. Okay, boom. That does seem like 3050 is going to be the level, and we throw this one. Okay, so let's just use this one. Right, so let's say 1618 is where we'd like to see the market come. Now, if you're looking at pips, right, it's very important for, as much as our focus is not on the actual outcome of the trade, because that's very difficult to do. You can't control what's going to happen, or you can't control what the result of the trade is going to be. Okay, you can't control that. What you can control is how much you risk before you put in the trade and how much you can potentially make. Now, from where the actual market price is to that 1618% Fibonacci extension, that is 45 pips. Okay, so that is 45 pips. And the safest place that you have your stop loss at is at that 31.30, which is September low. Right, that is 44 pips. Guys are with me. So that simply means you will be risking 40 pips, 40 plus pips to make 40 plus pips. Okay. Now that is a bad proposition in any day. You don't want to be making 1:1 for too long. Okay. You want to have a risk of 1 for a reward of at least 3. Okay. Because the whole idea of entering into a breakout is to catch sort of like the beginning of a trend or a continuation of the trend, right? So in essence, when you're trading a breakout, most of the time you're going to be trading in line with the trend. Okay? Although the market might shake you off and make you believe that you're not in line with the trend, but trust me, in most cases you are. Okay? Guys, let me just close it. So now when we're analyzing this, we're looking at this. Let's say we just have our daily 4-hour. Right now we're on our 4-hour chart, and we can see that the market has been on a decline, right? So it's pretty apparent, it's pretty simple to see that the market has been declining down, and we go through to our 1 hour, and we can still see that the market is declining. Right. Now, once we've established that we are in a bearish tone, right? Because we want to be trading a breakout in line with your major trend. Okay. Now, you don't have to do that all the time, but I suggest that in the beginning, you try and trade in line with the major trend, because it's going to make things much simpler. You're going to get more bang for your buck. The market will run away 400 pips, 300 pips with you in the right direction, as opposed to when you are going against the trend. Okay, against the trend means, let's say you have this market dropping down, for example, right? And you identify this as a support structure, right? This is against the trend, and identify the support structure here. Let me just put horizontal line, and you're expecting to go low. Market bounces off here, and rightly so, you go long, you get about 11 pips, and then the market moves away from you. As opposed to just isolating this support structure, and when it's broken, you wait for the retest, let's say, of this previous area over here. Okay, so 3180, looking for a retest of the 3180 zone, and you can see that the market is still moving downwards, right? So there's a bit of momentum. So that is the main difference of trying to trade against the trend as opposed to trading in line with the trend. Okay, so when you're talking in line with trend, our main focus is to get more pips, okay, more pips on average than we actually lose. And the only way for us to do so is to be in line with the trend, okay, or catch the very beginning of a reversal, which is very difficult to do. Trust me, guys. Okay. I know a lot of people have tried to do that continuously, but it's the probabilities of that happening are very low, and therefore the profitability of that type of system or that type of methodology is actually very low as well. Okay. Yes. Okay. So let me just read the question. So with the support line, the market has possibility to break through. Yeah, I mean that's what we'd be hoping to see. We'd hope to see the market break through and then reject, right? Not just close below that previous support structure or previous resistance, but close. Let me just get to my highlights. Okay, let me use this. Okay, so not just break this previous low over here, okay, but also break it, come back and retest, right, and then reject price at that particular level. So that would be ideally the situation where we're at. Because if, for example, we waited for this support bounce, market bounces off this low, and then we label this as support, this 3170 zone, and immediately when the market closed below that 3170 zone, then we'll be in a bit of trouble because a lot of times the market will come back, right? Which is why we wait for this to occur, because there are a lot of traders who are going to be chasing the market going down, especially if the previous candle, okay, especially if the previous candle was a large one, then it gives more room or more potential for more traders to try and chase the move going down, which then causes the market to reverse in the opposite direction, okay, and those traders getting stopped out, even though they were right, they're just getting stopped out, and obviously there's some trader out there assuming that short position that they actually have. So it's very important that, I mean, you're gonna have situations where the market just does this, okay, but you're also gonna have situations where the market, let's label this as our support structure, right? Okay. So you're also going to have situations where you have a nice solid looking support structure. The market comes in, closes below at 3204, and immediately as soon as that happens, market then just pulls back. Boom. Right, stops out everyone who was right on the short side. Right, anyone who entered short going in here, and stops them out at 32, 35, which is probably some significant number. It could be 20, 25 or 30 pips, but I'm guessing around 30, 50 pips. Okay, so you have the swing to the upside, boom, and then the market goes in your intended direction, but obviously you're not in the move, so it doesn't really count. So there's a very long answer to a very short question. In that, yes, we'd like to see the market break through that zone, but we'd also like to see the market come in and retest and sort of reject and bounce off that previous support structure. Okay, if it hasn't done that, it's still a very low probability trade setup, and we don't want too many of those in our portfolios. Okay. Okay, guys. Right, so let me just tidy up. Let me just finish up for today. With this, okay, I think someone mentioned about, they sent me a text advice on the USDC. And like I said, guys, we've already done the analysis on the on the Telegram. I think it was on Monday. Yeah, it was yesterday. We actually did analysis on that, so that link for that is in the Telegram channel. But if you look closely, we were expecting or were hoping for a push up first, okay, a push up to the upside, probably to around 31.40 before the market drops down again. Okay, that is simply because we'd like to get a bit more room to that 1618% Fibonacci extension, okay, which will then give us at least 100 pips for about 25, 30 pips worth of stop. Okay, because you don't want to have a scenario, if you catch it here, it's really not worth it. Okay, even though the market sort of rejected, but it's really not worth it in terms of pips. And obviously, pips really do translate to profits and how much is in your account. So therefore, we find it very important, or we look to make it very important to get the most out of a position as we possibly can. All right, so that would basically be my scenario. Obviously, I don't control the markets. I don't know how the markets are going to behave tomorrow, right? The next year, the year after that. But all I know is that at the end of the day, what I do control is how much I put on the position, okay, and how I manage my own trades. All right, guys, if there are no other questions, I will be ending off tonight's session here. I trust everyone has had a good one, and I will see the beginners tomorrow at 7 p.m. sharp. I will upload this video and send through the link on Telegram for everyone who has missed it. Okay, I did get a few guys apologizing for not being able to make it for tonight's session. However, no need to worry. You'll have the recording to go over. Trust everyone will enjoy the rest of the evening, and cheers, guys.